China's public owns something around 25,000 tons of gold. And Chinese ministries, not just the central bank, but mostly the PLA, own something around another 25,000 tons. And I mean, in the last 6 months, the Chinese government has encouraged its citizens to buy gold by providing a platform that allows them from their bank accounts to buy physical gold from the Shanghai Gold Exchange, even on a never-never basis. So, I mean, my guess, and it's probably tied into the new BRICS currency, which I believe is called the unit, the currency unit, that China will announce within 2 years that their currency is supported by the gold which its citizens own.
SimonHunt, a renowned economist and metals expert, reveals intriguing insights into China's gold holdings, stating that the Chinese public owns approximately 25,000 tons of gold, with an additional 25,000 tons held by various ministries, including the People's Liberation Army. The Chinese government's recent initiative to allow citizens to purchase physical gold through their bank accounts on the Shanghai Gold Exchange underscores a broader strategy to encourage investment in precious metals. This move is particularly significant given the ongoing Chinese real estate market crisis, which has prompted many investors to seek alternative assets. In his analysis, Hunt characterizes silver as the trading account and gold as the wealth account, highlighting their distinct roles in the market. Silver's industrial applications make it more responsive to economic fluctuations, while gold typically serves as a stable store of value during uncertain times. Despite Hunt's bullish outlook on silver, gold remains a focal point for many investors and analysts. Goldman Sachs, for instance, projects a target price of $2,700 per troy ounce for gold by early 2025, with some experts anticipating even higher figures. Hunt, however, offers a unique perspective on the recent surge in gold prices. He suggests that the rise is less influenced by anticipated Federal Reserve rate cuts and more by escalating geopolitical tensions. This view aligns with the actions of central banks and financial institutions worldwide, which have been increasing their gold reserves at an unprecedented rate. The World Gold Council's recent survey provides further evidence of this trend, revealing that 81% of central banks expect global gold reserves to continue expanding over the next year. This sentiment is backed by record gold purchases by central banks: 1,082 tons in 2022 and 1,037 tons in 2023. Before diving deeper into the video, subscribe to our channel and hit the bell icon to stay updated.
I think gold's rise has much less to do with the Fed cutting rates and much more a reflection of geopolitical tensions. And it's not just central banks that are adding to their gold reserves for this reason, but increasingly financial institutions. And it's the power of gold buying has been outside the OECD countries, well, outside the G20 countries, Middle East, Asia, Russia, China. Don't forget that China's public owns something around 25,000 tons of gold. And Chinese ministries, not just the central bank, but mostly the PLA, own something around another 25,000 tons. And I mean, in the last 6 months, the Chinese government has encouraged its citizens to buy gold by providing a platform that allows them from their bank accounts to buy physical gold from the Shanghai Gold Exchange, even on a never-never basis. So, I mean, my guess, and it's probably tied into the new BRICS currency, which I believe is called the unit, the currency unit, that China will announce within 2 years that their currency is supported by the gold which its citizens own. And I think they'll give out the figure. What does that do to the dollar? And also, Russia owns much more than is publicized. It's probably north of 12,000 tons. I think that silver over a year is likely to grow faster than gold. I would call silver is the trading account, but gold is your wealth account. And you have to ask the question, why is Washington and London so intent on attacking Russia and containing China? It's really because those two countries are the leading members of BRICS and SCO, Shanghai Cooperative Organization. And Washington, having at first dismissed BRICS as being anything of significance, now understands fully that if the BRICS summit is allowed to take place in October, when there will be a number of announcements made that will show how mature BRICS has become and that they are accelerating their development of their own unit currency, which will be based on, as we understand it, 40% gold, 60% member currencies, but those member currencies linked back into gold. That would be a big stab into America and its allies.
Hunt anticipates a weakening global economy by early next year, potentially pushing most countries into recession. He warns that central banks and governments may resort to aggressive measures, leading to sharp inflation and a significant decline in the dollar's value. The economist's projections are particularly alarming for the United States, where he foresees inflation potentially exceeding 13%. On a global scale, Hunt's outlook is even more dire, with inflation possibly surpassing 15%. These predictions come at a time when inflationary pressures are already elevated worldwide. The United States has recently experienced inflation at a 40-year high, while globally, 179 out of 194 countries have seen rising inflation compared to 2020. However, the IMF offers a more optimistic perspective on the global economic situation. Their latest projections suggest that most regions' inflation is declining faster than expected. The IMF forecasts a global inflation rate of 5.8% for 2024, a significant contrast to Hunt's double-digit predictions. Let's get back to the interview.
I think Martin Armstrong is dead right. War comes back to the point I made earlier, that America and her allies are not going to allow BRICS to mature into a real rival to their system. That's the bottom line. And that inevitably means war. Either the war is very soon, as we discussed earlier, or it will happen in a year or two's time. So if it gets postponed for whatever reason, then I think that the global economy is tipping over. By early next year, most countries will be in recession. Then all the central banks and governments will be throwing everything into the pie to stop a systemic failure. So inflation takes off, dollar falls sharply, and inflation takes off to an extent that it will probably exceed what we experienced, or some of us did, in the second half of the 70s and early 80s, 1981 being the peak in inflation. So you'll be seeing US inflation 13% plus, global inflation 15% plus. And what does that do for the bond vigilantes? Central banks don't control the long end of the curve. We will see US 10-year treasuries yielding over 10%. What does that do to a highly indebted world? End of story. So if war is postponed until after that happens, which will be when we 25, 26, end 26, early 27, then you will then have either rolling recessions or depression, plus war. But my fear is that war is going to happen before Inauguration Day in America in January. Let us assume no big escalation to the current conflicts at this stage. So we will probably see markets getting excited by central banks cutting interest rates, and we will see S&P rising sharply into the early months of next year, with base metal prices like copper rising to potentially over $11,000. But it is then that the real recession will start hitting. And then we will have big falls in equity markets and in base metal markets to the end of 2025. Then more liquidity is driven into the system, and you have the final hurrah, as I'd like to call it, when you have a takeoff in equity markets and takeoff in base metal markets, with copper potentially going to 14,000, and S&P over 7,000, et cetera, et cetera, et cetera. But then we come back to what I've just said, the bond vigilantes. But the alternative scenario, which I mostly fear, which is the war scenario breaking out by the end of this year, that all changes the equation.
The current economic environment poses significant challenges for gold and silver, with projections of a potential global recession likely to increase their value. Gold remains highly regarded as a haven, while silver's appeal is bolstered by its industrial applications. Ongoing economic pressures will continue to influence the outlook for both metals. Their importance as protective assets during turbulent times is increasingly evident. As we move through these unpredictable economic times, what are your predictions for the performance of gold and silver in the upcoming months? We'd love to hear your opinions in the comments below. If you enjoyed this video, please like, subscribe, and hit the bell icon for future updates. Thank you for tuning in.